October 15th is the personal tax deadline. And for a lot of you listening right now, it's either the most stressful day of the year or the day you finally admit to yourself, I should have handled this months ago. But here's the truth. It's not too late. Even with the deadline days away, you can still save real money, avoid penalties, and set yourself up for a stronger 2026 tax season. I've seen clients walk in the door in October with their backs against the wall, walk out with thousands back in their pocket, a plan, and peace of mind. And that's what I want for you today. So let's get something straight. October 15th is not just a random date on the calendar. It's a line in the sand. And if you filed an extension back in April, this is your last chance to get compliant. But here's the trap most people don't realize. An extension gives you more time to file, but not more time to pay. If you owed money back in April and did nothing, interest and penalties have been stacking every single day. I've seen people who owed $20,000 in April show up in October with $3,000 in penalties added on top of it. And that's the price of waiting. If this is you, don't panic. There are ways to reduce or even erase those penalties, but only if you act before 10/15. Let me tell you about a story about one of my clients. We'll call her Sarah. Sarah's a high earning professional. She filed an extension thinking she'd buy herself some more time, but she didn't realize that she'd owed. So she made no payment in April. And by the time she came to me in October, she was staring at over $7,000 in penalties. Here's the part that the IRS doesn't advertise though. She qualified for something called the first time penalty abatement. With one properly worded letter, we got those penalties completely wiped. Sarah walked away with $7,000 back in her pocket, money that she thought she'd lost forever. That's why you don't ignore October 15th. It's not just a compliance deadline, it's a chance to fix your mistakes before they lock in. Don't write a check to the IRS until you've talked to me about the abatement. Message me on Instagram the word penalty or book a session at Brister Tax Law today. That one step could save you thousands. Here's where it gets exciting. Even now, with days ago, you still have opportunity to save money. And let me give you a few ideas. Retirement contributions. If you're self-employed or you own a small business, you can still make contributions to a SEP IRA all the way up until that October 15th deadline. If you filed an extension, depending on your income, this could mean writing off up to $66,000 from your taxable income. That's not a small change. That can be game changing. Even if you already have a 401k through your W-2 job, your business might qualify separately for a SEP or solo 401k. And this is where people leave massive money on the table. I had a client who thought that they were stuck owing $30,000. We opened up a SEP, maxed it out, and boom, their tax bill dropped by $12,000 overnight. The one move literally paid for their retirement savings. Next up, charitable contributions. Yes, charitable giving is powerful, but here's the catch. The IRS won't honor a deduction without proper documentation. This means a receipt, bank record, or a letter from the nonprofit. If you wrote a $5,000 check to your church, but you don't have the paperwork, the IRS can and will deny it under an audit. So before October 15th, gather your proof. That's free money most taxpayers miss because they're scrambling and they don't have the receipts ready or they forgot about it completely. Don't guess, don't ballpark, don't round up. If the IRS audits you, they want to see the exact paper trail. Spend an hour before October 15th getting this right, and it could save you thousands. Another mistake that I see is misalignment of your business expenses or forgetting or not cleaning up the mess in your books. If you're a business owner, this is your last chance to properly align your expenses. I see this mistake all the time. People dump personal expenses into their business or forget legitimate deductions because their bookkeeping is sloppy. Think meals, home office, travel, mileage, all of these add up. But if they're not categorized before you file, or you don't turn those over to your accountant, you're literally giving the IRS a tip. I had a client who didn't track mileage. They came back to me right before we filed. We reconstructed their mileage log using their calendars. And that one correction turned it into a $4,000 deduction. Imagine what you're leaving behind just because you didn't track it. Another one is the HSA, or the health savings account contributions. Now let me hit you with a reality check. A lot of people think that you can still contribute to an HSA if they filed an extension, and that's dead wrong. The deadline for HSA contributions are the April filing date, not October. So if you missed it, you missed it. But knowing that now means you won't make the same mistake next year. Here's a pro tip. Use this October as a wake-up call. Put a reminder in your calendar for April, because HSAs aren't just a deduction. They're a triple tax advantage account. They're tax deductible going in. They have tax-free growth, and they come out tax-free for qualified medical expenses. Missing that deadline in April could cost you more than you think. Another thing that I see missed all the time for business owners in their tax return is self-employed health insurance premium deductions. If you're self-employed, your health insurance premiums are deductible against your income, but only if you document that correctly. I can't tell you how many taxpayers miss this just because they assume it's just a personal expense. That's thousands of dollars in deductions gone just because no one told them or they overlooked it. State and local tax planning too. This one's tricky with the $10,000 cap and the new tax laws that just came. But if you got property taxes, state income, make sure they're included. Too many people forget to carry them into the return and end up overpaying. Another one that I see missed are education and credit reviews. Did you pay tuition, student loan interest, or have kids in college? Credits like the American Opportunity Lifetime Learning Credit are often missed in the rush. These are dollar for dollar tax savings, not just deductions. It blows my mind how often these get skipped. So here's a bottom line. Retirement contributions can still slash your taxable income. Charitable giving works if you document it. Business expenses need to be cleaned up before you hit submit. Even in October, there's still thousands of dollars on the table, but if you rush, you miss them. And once October 15 passes, it's gone for good unless you file an amendment. If you're still not sure which one of these apply to you, reach out, because this is where one planning call can pay for itself. This is the part no one tells you. Filing garbage just to meet the deadline can cost you more than missing it. Every year I see people panic. They throw numbers on a return, hit submit, and then the IRS cashes that check. Guess what? They don't send it back to you if you overpaid. One client that I had filed his own return last year, thought he owed $18,000. We amended his return. His real liability was $9,000. That's a $9,000 donation to the IRS because of bad timing. Don't feel rushed. File smart. Don't just get it over with. Book a discovery call, even if you're down to the wire, and we'll do it right the first time. Here's an opportunity that people miss though. October isn't just about filing the last year's taxes. It's a doorway to this year's planning. You still have 3 months to restructure your entities, implement deductions, and line up strategies before December 31st. Think about this. Would you rather fight the IRS over penalties in April, or put a plan in place in October that saves you $20,000 come April? That's the difference between playing defense and playing offense. Schedule your tax strategy session before the 10/15 deadline. Don't let the deadline be just about survival. Let it give you momentum. And if you've ever felt like tax season owns you, this is your moment to flip the script. Walking into the new year, knowing that you've handled last year's taxes, you've minimized penalties, you maximize deductions, and you set up a strategy for the future. That's real peace of mind, that's confidence, and that's control. Here's the bottom line. You want to file smart. You don't want to just get it over with. Don't ignore the penalty abatements. Use the tax strategies that we mentioned earlier, and treat October 15th as a launchpad into your next year and end of the year planning. And if you're listening and you're behind, don't be embarrassed. Take action. Every wealthy person I've worked with has made mistakes. The difference is they took action when it mattered. So take action now. DM me, book a strategy session, or click the link in the show notes. Don't leave money on the table, and don't give the IRS free donations.